Good day, everyone, and welcome to our webinar for May. We begin as usual in America. And I'd like to just say that at the beginning that politics does not usually impact on the share market. What happens in the political arena has limited impact on the share market. What the governor of the Reserve Bank says, however, does have a direct impact. But politicians usually, if they do have an impact, it's usually short-term and specific to a single sector, something like that. However, this year, the outcome of the US and South African elections is different. Both of them will have long-term and, in our opinion, pervasive impacts on the market. The November elections in America will impact markets worldwide, but it is difficult to predict who will win in America. On the face of it, Joe Biden should win by a landslide. The economy is booming, which has always helped the incumbent, and the Democratic Party is far better organized than the Republican Party. Trump, of course, has been loudly claiming responsibility for the highly unpopular Roe versus Wade decision from the Supreme Court, and that has alienated many more moderate and independent voters. Trump is also obviously fighting multiple criminal indictments, state and federal, and he has far less cash to throw at the elections and advertisements and so forth. But still, there are 6 months to go before the election actually takes place, and much will undoubtedly happen during that time. As a private investor, you have to base your investments on your assumption about what will happen in this election. You cannot shy away from difficult predictions like these. That means that you may have to develop a vision. Well, you do have to develop a vision of what the future will look like, preferably one that is well researched and carefully thought out. One major factor will be the war in Gaza. Biden has lost a considerable amount of support because of his continued support for Israel, and now he has sent the head of the CIA to negotiate a peace settlement, which may in fact take place. The recent killing of 7 aid workers by Israel has brought things to a head. Since then, Biden has taken a much tougher line with Netanyahu. The problem, of course, is the remaining Israeli hostages, which Hamas still holds. But if you look at it, the Palestinians have lost an estimated 33,000 people killed, which seems disproportionate to the 1,136 Israelis killed during the attack by Hamas at the start of this thing. And there are mounting humanitarian concerns over what is happening in Gaza. Hopefully, Biden has managed to change direction in time to recover his popularity in the election. Turning to the U.S. economy, the CPI, the Consumer Price Index, in March came in higher than expected. It was at 0.4% for the month of March, which was ahead of economists' predictions of 0.3%, and it raised the annual inflation rate to 3.5% from February's 3.4%. And at the same time, in March month, the U.S. economy created 303,000 new jobs, which is extraordinary. But GDP only grew by 1.6% in the first quarter, far less than the expected 2.2%. And overall, however, this suggests that rates will probably have to be kept higher for longer. And the market now expects the first rate cut only in September, of course not June. And they're only expecting 1 or at the most 2 rate cuts before year end. Clearly, the record level of interest rates is not yet sufficient to cool the US economy. About half of the S&P 500 companies have published results for the first quarter. 77% of those published show that their earnings per share is ahead of estimates, which is pretty much in line with a 5-year average. Earnings are about 8.4% above estimates. Meta, however, was below its predictions on revenue, and on one day, the 18th of April, the share fell 13%. On that same day, IBM also offloaded 8% after missing its first quarter revenue expectations. Caterpillar was also down, while Microsoft fell 4% and Amazon fell 3%. So that was quite a tough day for the market. The re-evaluation of the market has caused the S&P to enter a correction, which you can see on your screen here. There's the correction, right? You'll note the loss of upward momentum before the correction occurred. Momentum is the one thing that you can look at that will give you early warning of a change in the direction of the trend. And so it did in this case. And you can see how the S&P was rising very sharply up until then, lost momentum, and then started to drift downwards. Now we are in the middle of a rally within that correction. So the correction is here. Here's the small rally within that. But that rally is running out of steam. And we have said all the way along that we do not think this correction is over yet. We've talked about it coming back to find support here at this 4796 level, which is the level of the previous record high some years back. Also, you should note that there was a certain day, well, over here, you can see this pattern here where the S&P 500 fell for 6 days in a row. This is pretty rare on the S&P 500, and we went onto Twitter and we said that the next day would be an up day, as it was. And that was, in fact, the beginning of this little mini rally. So it's something for you to remember. If you see the S&P 500 going down for like 6 days in a row, you can be pretty sure that the next day it will go up. Okay, so there was some slightly better economic news which caused this little rally. The tensions between Israel and Iran appeared to subside a little bit. The Israeli Iron Dome seemed to be enough to destroy most of the 300 missiles and drones that Iran threw at it, but at an estimated cost of $1.3 billion. The gold price has been rising sharply since March, but now appears to be at a cycle top. We believe that this correction is now still in progress, so we're expecting it, as I said, to come down to this 4796 level. Just keep your eye on that. All right, now I'd like to just talk a little bit about the Chinese economy. That economy has been taking strain for the past 3 years, mainly because of difficulties in the property sector where there has been a bubble. About 25% of the growth in Chinese GDP, gross domestic product, comes from the property sector. And the collapse and liquidation of the Evergrande property group has had a major impact. If we look now at the Shanghai Stock Exchange, you will see, I'm just going to put a bit more data on the screen. Here you can see that about 3 years ago in February 2021, the market made a high, and it's been in a steady downward trend supported by further touch points here on this trend line. And now what we're facing here, what we're seeing over here, is Chinese government interference in the market. So they've been buying shares in order to try and sustain the market levels at the current point. I'd just like to now zoom in and look at just that last 6 month period over here. Now you can see here, there's the downward trend line, which is being broken. This is Chinese government support. There you can see it, and you can actually see it over here as well. Whenever you get these long periods of flat, identical candles, that is because of Chinese government interference in the market. It does look like it's having a positive effect, but in our experience, interference in free markets like this do not have the long-term effect desired. And there are plenty of examples of that. So this is the Shanghai Stock Exchange, which is a good measure of the Chinese economy, and that does give us a good indication. It also obviously shows you the importance of long-term trend lines, and these have been quite effective in letting us know what is going to happen here. All right, so now let's turn our attention to Ukraine. Ukraine, the war there is continuing, but of course it's not a war between Russia and Ukraine. Ukrainian troops are doing the fighting, and the fighting takes place in Ukraine, but it is increasingly clear that NATO cannot allow Russia to win this war. It simply cannot allow Russia to win this war. More and more NATO countries are beginning to realize this, and obviously the way the war has been going on in Ukraine has had benefits for NATO, because it has led to a steady degradation of the Russian war machine at no cost to NATO in terms of troops on the ground. It's also helped NATO to attract and fix two very powerful members in the form of Sweden and Finland, new members. So NATO has actually got bigger and stronger and far more unified. And all that NATO has had to do so far is to supply weapons and money. But the war is really between Russia and NATO. So in the end, NATO has to decide, do they want to win this war, or do they want to allow Putin to win it? Now, Putin, on the other hand, has now put the entire Russian economy onto a total war footing. It's estimated that about 40% of Russia's very limited gross domestic product is now committed. But the Europeans and Americans do not really see themselves as being at war, especially the Americans. For them, this war is really mostly a foreign policy issue and not really something that they are involved in directly. Obviously, for Europeans, it's much closer to home, especially those countries which share a border with Russia. But even for them, it is not yet anywhere near an all-out war as far as they're concerned. At this time, they have front row seats to what is happening, but they do not see themselves as participants yet. NATO has become less and less concerned about the prospect of nuclear war, because the threat has been made so many times that it has lost its sting. And it is clear that Europe is moving steadily and inexorably towards a greater involvement. They are now moving their economies more towards a war footing. They are producing more weapons. They are signing up more soldiers, more permanent force soldiers. And it is clear that, NATO is also supplying weapons to Ukraine that it did not previously supply, such as main battle tanks, F-16 fighter jets, long-range artillery like the ATACMS system. And now there is even talk of putting troops on the ground, particularly from France. If NATO were to spend just 3% of GDP on defense, Russia would be doomed. It is NATO's arm's length involvement that is proved to be insufficient. America was never going to supply the ATACMS system, but now they are supplying them, and in quite large numbers. And they know that these long-range weapons, which have the ability to fire missiles up to 300 kilometers, will undoubtedly be used on targets inside Russia. Britain has also come forward and rustled up a new £5 billion aid package, which is very good. And America has found a further $6 billion over and above the $61 billion already committed. So that will help. But it is taking time for this aid to get through to the front lines in Ukraine. And the Ukrainians are fighting a rearguard action, giving up some ground to the Russians at this stage. Sanctions, of course, are being tightened relentlessly, and they're now choking off Russia's oil and gas sales. Both India and China are now buying far less Russian oil and gas. The Ukrainians have proved to be very innovative and are using homemade drones to destroy refining capacity, oil refining capacity, deep inside Russia. In this situation, the approval of the $61 billion US aid package came as a huge shock to Putin. He was not expecting that to happen, at least not anytime soon. Now he is in a truly desperate situation, especially if Ukraine can find more conscripts. He is literally now fighting for his life, in our opinion. So desperate men do desperate things, and that is something to be concerned about, I guess. All right, let's turn our attention now to South Africa and to the situation as indicated earlier. The coming election, which is at the end of this month, is going to have an impact on the share market, positive or negative. The consequences are likely to be significant. The impact will come first on foreign direct investment and the rand. So those will move quite quickly. Longer term, there may be major changes to economic management. Recently, the ANC has engaged in a number of electioneering ploys, most notably the announcement of the 3.4 billion rand upgrade to Durban port. This port is known to be the worst run port in the world. There are now 2-week delays for ships wanting to dock there, and many ships just bypass it. The second thing that they've done is they've announced a 23.8 billion rand boost to the UIF, the Unemployment Insurance Fund's labour program. That was announced by Thulas Ngxeki, the Minister of Labour, to enable 55 projects to go ahead before the election and employ as many as 700,000 people. The timing of these two announcements really is obviously to boost the ANC support in the coming election. Against this, the ANC have suddenly decided to force spaza shops to register with the government and pay taxes. This is an extraordinary decision to come immediately before the election and shows how disjointed their policy is. It will undoubtedly result in the police harassing these roadside merchants and confiscating their stock on occasions. Spaza shops account for a massive amount of employment in South Africa, and they make up for a lot of the lost employment in the formal sector of our economy. All right, the Electoral Court has decided to let Mr. Zuma run again, and that, of course, is very significant. Mkhonto we will undoubtedly take a big slice out of the ANC's support at a critical time, especially in Natal and Gauteng. Of course, Zuma himself is 82 years old and his health is in question. He's had a number of unexplained falls recently, but Mkhonto we says there's nothing wrong with him, which is ironical because, of course, he is out of prison on a medical parole because he was dying, but apparently he is in great health according to them. Trevor Manuel, who was previously, of course, the Minister of Finance here in South Africa, and who's now the chairman of Old Mutual, has said that South Africa over the last 10 years has lost about R1 trillion in foreign direct investment. That is an extraordinary statistic. R1 trillion. Can you imagine how much that would impact South Africa if we still had that money here in the country? It would have reduced unemployment and everybody would be far better off. So this, in our opinion, is a severe indictment of the ANC. All right, let's take a look at the economy. There's been a sharp drop-off in load shedding in the first quarter of 2024, and that has been sufficient to impact gross domestic product. The Reserve Bank is now predicting that the economy will grow by 1.2%, which is about double last year's 0.6%, and that shows that load shedding is still a major factor in the economy. However, in 2023, in the year of 2023, 5.5 gigabytes of renewable energy was installed in South Africa, bringing the total amount of renewable energy in this country up to 7 gigabytes. This, of course, has resulted in lower load shedding, which helps the ANC immediately before the election. It will also, of course, boost growth in this country for years to come. The Consumer Price Index fell to 5.3% in March from February's 5.6%. So inflation is still coming down. Of course, the Monetary Policy Committee's objective is to get it down to the midpoint of the target range, which is 4.5%. Interest rates in this country are only expected to come down in the fourth quarter now. This is pretty much in line with expectations for rate cuts in America. The Reserve Bank is saying that inflation this year will be about 5.1%, which is very well controlled, especially when you compare it to the inflation rates in other emerging economies. Argentina, for example, is sitting with an inflation rate of 175%, so South Africa is not doing too badly. The savings rate in South Africa has always been bad and continues to be. And that is probably the main reason for the low growth rate in this country over the past decade. Savings, of course, provide the capital necessary to finance new projects. The only alternative to this is cash from outside, investment from outside, which is called foreign direct investment. In the fourth quarter of 2023, foreign direct investment was 15.5% of capital formation in South Africa. The national savings rate was 14% in 2023, down from 2022's 14.9%, so it dropped nearly a 1 percentage point. The average for emerging market economies is about 34%, which gives you an idea of how far behind we are. In 2023, businesses saved 15.9%. Households saved just 1.7%, and the government dis-saved 3.6%. So that gives you a picture of our savings position. The ABSA Purchasing Managers Index in March came in at 49.2, showing that manufacturing is in a decline in this country. Also, obviously, it reflects the problems with Transnet and the rail and port system. The PMI also shows that the South African economy is once again muddling through. Mining production was up 10% in February due to lower load shedding. Iron ore production rose by 43%. That was quite impressive. Chrome and coal were also up. The price of maize has risen by 36% so far this year, mainly due to El Niño drought conditions, especially during February. The maize crop is expected to be about 25% smaller than last year. But fortunately, we have a surplus from last year, which should see us through. The coming year is expected to go back to El Niño, which is expected to go back to La Niña, which is expected to be wetter and cooler. This El Niño, La Niña cycle is expected to become more extreme due to climate change in due course. I'd like to now just spend a little bit of time talking about the Rand. Just get down here and find the chart. Okay, what I want to draw your attention to is something we talked about 2 months ago in the confidential report you see here on the 6th of March, when I drew your attention to the fact that the Rand was actually in a triangle. And I said that the triangle like this shows that high uncertainty levels are slowly diminishing and there's increased certainty coming into the market. What I want to draw your attention to now is that over the last 2 months since we made this observation here, you can see that the Rand has stuck within that triangle, bouncing the lower trend line over here, the upper trend line over there, and coming back to the lower trend line just yesterday before bouncing off it. So what you can see here is that the triangle is actually a very powerful predictive tool in the right circumstances. And it is interesting to see this technical formation happening so effectively. We believe that the triangle will be broken on the downside. In other words, we will break through this upper trend line here because, of course, this is a weakening trend and down here is a strengthening trend. So we believe the Rand will break on this side and go towards 20 Rand to the US dollar in due course. Okay, a few general points. VW decided to invest a further 4 billion Rand in its Kariega assembly plant. Of this, about 130 million will be invested in generators to mitigate load shedding. The plant will build a new SUV, the new VW SUV, and it will also continue producing Polos and Vivos. Clearly, VW believes that South Africa has a positive long-term future. Quite interesting that. South Africa is moving rapidly towards private sector involvement in the railways. This could result in a huge increase in much cheaper rail transport, which would boost the economy for years to come, especially the mining sector. The maintenance backlog in the railways is estimated to be about 30 billion rand. Only about half of our 21,000 kilometers of railway lines are viable at the moment. The new leadership at Transnet has been a major factor in the change. Okay, talking about 91, the listed company. They did a study on a basket of products which they found in a newspaper, a citizen newspaper from 1986. And they looked at the price of those products which are substantially the same as they were in 1986, and they could compare the prices. And based on that, and they're talking about products like Cross and Blackwell mayonnaise, Surf, all gold tomato sauce, and so forth. And these are all consumer products, obviously. And based on these products, they concluded that the inflation rate for these products was about 9.1% per annum compound. That is somewhat higher than the official inflation rate over the same period of 7.5%. And it shows the steady erosion of the buying power of the rand. It shows that over the long term, fixed investment are hopeless. Fixed interest investments, any investment that only gets a fixed interest, is basically hopeless, especially after inflation. Private investors, to make a real return on their money, must invest either in shares on the JSE or in property. Okay, last general point that I want to make. Municipalities currently owe Eskom 74.5 billion at the end of February of 2024 for electricity, unpaid bills for electricity. That figure has doubled since 2021 when it was 35 billion. The largest debt is owed by Tshwane, which used to be called Pretoria, which owes 8.6 billion rand. The top 10 municipal debtors owe Eskom about 45 billion rand. This problem shows that Eskom's financial position is getting steadily worse. Eventually, in our opinion, Eskom will go out of business and it will sit with a huge debt, unresolved debt, which of course taxpayers in this country will eventually have to pay. All right, let's look at some commodities now. The basket of platinum group metals products which this country produces has declined in price by about 1/3 this year. So I just want to go to the palladium price just to show you that as an example. The price of palladium, let me just put a bit more data on the screen. There we go. You can see the price of palladium peaked in South Africa at about $3,000 an ounce in March of 2022. That's over here. And since then it's been declining, and it's now trading for around $1,000 an ounce. This, of course, this declining price impacts companies like Sibanye and Amplats. South Africa, of course, is not the largest producer of palladium in the world. Russia is. The main use for palladium is in catalytic converters for motor vehicles. Internal combustion engines are rapidly being replaced by electric vehicles. And so that is obviously impacting demand. Sibanye, as we all know, announced the retrenchment of as many as 4,000 of its employees, and that retrenchment will also affect 915 subcontractors who will have less work. The company wrote off assets of 47.5 billion in its financials and made a loss in 2023 made a loss in 2023 of 37 billion compared to a profit of 19 billion in 2022. Of course, the nature of precious metals or mining companies generally is that they are volatile because they depend on the internationally set prices of the commodities that they produce. And so Sibanye is not exempt from that, and we'll talk more about that a little bit later on. If we turn our attention to the gold price, it's quite an interesting situation that's going on there. Let's put a bit more data on the screen here. Right. So if we look here, you can see this is the line the resistance line at 2060. It's a long-term resistance that gold has bumped its head against many times over the years. And in a tweet recently, I drew attention on the 15th of April to the fact that at the top of each cycle there was what we call a shooting star formation. Here you can see one there, this long one here, and then over here we've just had another one. So shooting star formations occur when you have a very long upper shadow on the candle, very long upper shadow. So the body is small, but the upper shadow is very, very long. And what that shows is that the bulls tried to push the market up, and they did push it up very high, but then they were reversed by the bears and pushed all the way back down to where they started from, more or less where they started from. That gives you this candle with a very long upper shadow and a very small body. The rule for a shooting star is that the body, the upper shadow must be twice as long at least as the body. So you can see that in all three of these cases, that is what happened. The point is that shooting star formations inevitably come at the top of a cycle. And you can see here you've gone up very strongly, shooting star, and then trended down here. The same thing happened here, up very strongly, shooting star, then trended down. And look what we've got right now. We had a shooting star the other day. We tweeted about it on the 15th, but it actually happened on the 12th of April. And then you can see since then, the gold price has been trending down. So this is just something to draw your attention to, something you should understand about technical analysis and about charts. We expect the gold price to continue rising, but in the short term, it's definitely in a bit of a correction. Okay, let's talk about Bitcoin. Bitcoin is something that everybody gets very excited about. But of course, it is supposedly an asset, but it has no fundamentals at all. In other words, it's not an asset like, for example, shares in Discam, where you've got assets and you've got profits coming in all the time. You've got staff, you've got land, you've got buildings, you've got stock. That is an asset. Here you've got no assets. So the only way to evaluate a cryptocurrency is with technical analysis. So this is the previous high. Do you see this long straight line here? That shows you where the previous high was a while back, and it was at $66,878. There it is. And you can see that Bitcoin has risen very sharply since its low in January at $38,000, a very sharp upward move, and then it is bumping its head against this resistance here at around $66,000. And it's done what we call a descending double top. So there's the first top there, you can see, and then a lower top below that. And it's now fallen back below that 66,000 resistance level, made another top, which we would describe this technically as a failure. And now you can see it falling sharply. Now, so our advice to you, if you are a Bitcoin person, is if you have them, sell them. If you don't have them, don't buy them. And indeed, that has been our advice about Bitcoin ever since it came onto the investment horizon. Okay, now I'd like to just talk about some companies. I'm going to start with Tharisa. Tharisa, of course, is a platinum group metals mining company. And as you can see from this chart, it made a peak. Okay, let's go back there. It made a peak in April 2022, and since then it's been in a long-term downward trend, obviously caused by the drop in commodity prices. And we advised quite a long time ago to apply this trend line and then wait for an upside break. That upside break came the other day. Here you can see it came on the 26th of March 2024, and it was at a price of 1,405 cents. It's since moved up to about 1,575 cents, and it may be in a new upward trend. So I just want to draw your attention to that. We believe the commodity cycle is either at its lowest point or close to it. So we're expecting commodity prices to begin moving up again. Okay, the next share I want to talk about is Purple Capital. Quite a controversial company, this. Just put 5 years data on the screen here. Again, you can see that technically, I mean, this is a company that offers a trading platform in equities and other securities, and it also does asset management. Now you can see it made a double top here in January of 2022 and in January 2022 and April of 2022. And then you can see after that it entered a long downward trend. We recommended that you apply a 65-day exponentially smooth moving average to this and wait for a clear upside break. That break came the other day over here on the 26th of March at 66 cents. Since then, the share has moved up. And there have been a lot of public announcements and tubes and interviews done by the CEO of Purple Capital saying that they've now turned the corner and things are going to get a lot better. We are in agreement. We think that Purple looks good at the moment, and perhaps they have turned the corner and maybe it is entering a new upward trend. So that's another one for you to look at. All right, Barlow World. Barlow World is a big international supplier of heavy earth-moving equipment. It supplies the mining sector, agriculture, power, automotives, and logistics. It's known for its brands like Caterpillar, Avis, and Massey Ferguson. And it operates in 24 countries internationally, but especially in Southern Africa and in Russia. Those are its two big markets. Now, the share has been in a downward trend for a long time, since 2022, mainly because of the Ukraine war and the need to impair its assets in Russia. We advised a long time ago that you should apply a long-term downward trend line. Here you see that long-term downward trend line in the top chart, and wait for a clear upside break. That break came on the 10th of April, right? 10th of April 2024. At a price of 72 Rand. But before that, before this upside break, it gave a very strong on-balance volume buy signal. Here you can see it was moving more or less sideways, the OBV, and then suddenly you had this on-balance volume buy signal. And this usually means that there's some insider trading. In other words, somebody inside the company knows of something important that's going to push the share price up, and so they start buying the share. And in the bottom chart here, you can see the volume. And you can see how that volume increased sharply over here, giving this OBV buy signal. So for an OBV buy signal to happen, you need a sharp increase in volume accompanied by small increments in price. And that gives you this very sharp upward move in the OBV chart, which is the buy signal. Okay, but we advised you to get in when it broke up through the trend line, which it did here on the 10th of April at 72 Rand, and it's still rising. Okay, it's now over 85 Rand and looking good. Now, we don't know what's going on with Barlow World, but here you can see they published a cautionary on the 15th of April telling investors to use caution. There's something going on. Negotiations, perhaps a takeover of some kind. We don't know what's happening, but we can see the volume, and that tells us that the insiders are busy snapping up all the weekly held shares that they can get in the marketplace. All right, so it's just something for you to know. We've seen these kind of patterns before in the market. Okay, so now the last one I want to talk about today is Sibanye. Sibanye is an interesting company. It's obviously also suffered with the downward trend in platinum group metals especially, but in precious metals over the last couple of years. And you can see here there's a nice upside break that came through that trend line. We advised you to apply this trend line. You can see it's connected there at the top, and there's a touch point here, and then an upside break over there at 2168. So we think that Sibanye, which is diversified into various what are called green base metals, It's run by Neil Froneman, who is reckoned to be one of the most brilliant mining engineers that South Africa has ever produced. So obviously it's a volatile commodity share, but it looks like it's very cheap. If you were to buy it somewhere around its current price of 23 Rand, you might not be buying it at the bottom. But one thing you do know, you're doing a hell of a lot better than the big institutions that were filling their pockets with this share up here a couple of years ago in 2022 at 75 Rand. You're doing a lot better than them because you're buying it for 23. Of course, if you do buy it, you must apply a strict stop-loss strategy, but that applies to all your investments. Do not hold shares that are falling. Okay, that is one of the great secrets of investment. Investment is not so much about making money as it is about not losing it. Ladies and gentlemen, that's about all I have for you today. I hope that you found something of value in that, and we will speak again. We will conduct the next webinar like this on the first Wednesday of next month. Thank you for listening to me.